Hey, friends and family, it is Ryan Otteson here with another episode of This Week in Real Estate. Our company highlight this week, monthly numbers. Why is that? Well, it's the first week of April, which means March is over, and we have to study the market. There's a couple of ways we can do that. Obviously, looking backwards is a lag measure. If you're looking for something that's giving you lead measures, right now, tomorrow, this is where you want to reach out. Shoot me a text message or an email and say, Ryan, let me get one of your market reports because it's rolling 30 days, right? So that data is updated fresh for a lead measure, for a lag measure. We're going to jump backwards and see what happened in March. Now, stay tuned. Here in a couple of days, we're going to be dropping out a quarterly review to see not only how does this quarter compare to the quarter last year, but we're going to go fourth quarter versus first quarter as well, so we get some really good idea of what's going on in the marketplace. Let's look at our foothill communities, Glendora, San Dimas, and Laverne. Now, the critical stuff that we're going to look at is this number right here, this month supply number. You'll notice it's the first one on all lines, the month supply. Now, pay attention. That's a 0.8. That's less than 1 month's supply. Here's 1.3 months. Now, remember, month supply of inventory says that if no other properties came on the market, whatever was there, literally they'd all be gone in less than a month. Right. So if you're at 0.8 of a month, it would take probably 3 weeks and everything would be gone. So if it feels like there's no inventory, it's because it's selling quickly. There is inventory. You're either just not getting it as an agent or you're not getting it in your hands as a buyer because it's moving that quickly. How quickly, you ask? Well, that's a great question. We look at our days on market, 7, 6, 8, right? Less than a week, these things are moving off the shelf and then closing. Closed units. All of this is crazy. Look at this, year over year, median sales price up 15%, up 25% year over year. That's incredible. A 13% year over year return when the state of California averages about 4.5 to 5% return. I mean, we're 3 times our state's normal annual average. So all of those numbers are below. You can take a look at that. It is imperative that you start to track your numbers. Can I share another crazy slide with you? Yeah, let me share this with you. So there it is. Look at this. I want to show you this really quick. This goes back to 2017. Now we can go back really quick. Now I'm going to get here in a second. Let's just go max. Max takes us back to 08, right? Because I want you to be able to see the dip. 2009 was the bottom. Then we're rolling all the way out. So look at the entire MLS. I have that in here. We normally just talk about our foothill communities. But the reason I put the entire MLS in here is I wanted you to see the drop of the average, right? So if we just take that off really quick, here's us. I want you to see the bend in the chart, right? Because it doesn't look like it's that big of a circle because I get dramatic, right? I'm like, oh, it's the bottom of the market and it's the top of the market. So if that's the case, if this is the bend right down here, 2009 to 2010, right? We dipped even a little bit more over there in San Dimas. Then we started climb. Now, this was max. I'm going to just go back 3 years, okay? Actually, let me go back 5. I think it gives us what I'm looking for. Yeah. So, because when it does it, right, it like stretches the line out, kind of brings everything in a little bit more. Here's what I want you to pay attention to. Not the volatility, right? Because what's green? Laverne, right? So Laverne, if we were to click on, what is that, February of 2019, and we go to total closed sales, there was 18. That's not a bad little number. Okay, but here's what I want to show you guys. Look right here. Let me see if I can zoom in on this at all. Yeah. Okay, cool. So look where we're at right here, right? We had a spike up here in Laverne. It dipped back off in March, right? So this is January of 2022. One up, but it's coming back down. Really, we're right in this number. Well, what number is that on this line? That's about the 800,000 mark, right? So a lot of these, about 800 to 900,000, right? Now, look, we've been there. We've been in between these 2 lines right here. 1 month, 2 month, 3 month, 4 month, 5 months, 6 months, 7 months, 8 months, 9 months, 10 months, really 11 months, almost a year we've been doing this. So if you've ever heard me talk about at the top of the market, even at the very tippity top, we'll be doing this. That's what you're seeing, right? So look at the last time there was a real big jump. Tail end of 2020, right? So 2021, we climbed, And then we sort of stuck right here, right? I mean, we're just sort of there. Why am I bringing that up? Look at 2017, right? So what I'm saying is if for about 6 to 8 months, we call that a plateau, right? So as the market's up, and if we're holding within this $100,000 price range and we're just going, we're plateauing there. And the question is, why and what's next? Well, one of the whys is there's not enough new inventory coming on the market. We just showed you that with everything 1 month or less. That's unheard of, right? That number and a seller's advantage is 3. Healthy, it's 4 to 5 months of inventory, right? So even when the market starts to drop, right? Even when it starts to soften from 1 month to 3 months, still going to be in a seller's advantage. Seller's market is what you're going to hear, right? Incredible. But if we're plateauing, the question is, are we plateauing just because? Are we plateauing because rates, whoop, and buyers are like, okay, we'll hang a little, but because inventory is so light, the prices are starting to carry instead of stopping to incline? Or did the market just breathe as we watch the world and it's going to run up again? We just don't know. It's why we do these monthly number updates. We got to start tracking this stuff. It's why I implore you to get on a market report. If you're not receiving one of our monthly market reports, you can adjust it to get it weekly, twice a month, once a quarter, once a year. Right now, I would suggest looking at it, depending on what you're going to do, I would suggest looking at that thing at least once a month, if not twice a month. If you're thinking about selling in the next 6 months, you got to get there. You got to get on it twice a month. You got to get it every other week. Because if all of a sudden we're here and we go tick, okay, let's look at it again, tick, let's look at it again, plateau. Okay, maybe we don't panic yet, but that you only lost 30 days. If you're only looking at it once a month, right, how much value did you lose? Or potential gains, and then we exit, right? So I implore you, get on one of our market reports. Scroll down below. We've got an amazing event. You'll hear me talking more about it. The For Freedom Outreach Happy Hour, April 14th, Luca Bella, downtown Glendora. Wicked excited. Thanks for letting me talk to you about our numbers. They are important, especially if we're tracking our net worth and our equity in our home. So appreciate it. You're valued. You're loved. You're appreciated. Have a great day. We'll talk to you soon. Bye-bye.